Cryptocurrency markets have been crashing, Bitcoin's been sent tumbling, Ethereum is plummeting, and you might be wondering what is happening and why is everything been unraveling? Today we're going to dive into this. We're going to look at all the recent news stories, from the DeFi lender, halting withdrawals, to some of the layoffs across the sector, and then stay till the end because we're going to discuss where cryptocurrency markets might head from here.
Welcome to the channel and enjoy.
So before we dive into all of the recent news, it makes sense for us to take that step back and have a think about the current lay of the land. As you know, cryptocurrency markets, much like many risk assets across the economy, have been sent crashing. Bitcoin is down by around 70% from its peaks last year. It's been trading around that $20,000 support level. It broke through that 30K level, which investors were watching to see whether it would hold. Now this 20K level is the key support. Ethereum is doing similar around that $1,000 level. It's down by over 75% from its peaks. And of course, everybody's familiar with the story surrounding Terra Luna. If you aren't yet, we did a video diving into that story and its collapse, which you can check out after this one. However, it's worth noting, as we're all familiar with now, this is not a story that's isolated to cryptocurrencies or the blockchain. Risk assets around the world have been sent tumbling. Global stock markets are down, with the S&P 500 down by over 23% and into a bear market. The Nasdaq, for the more growthy end of the market, is down by over 30%, and it's officially into crash territory. We know there's an uncertain macroeconomic environment. Inflation is rising and more persistent. The last print was 8.6% on the CPI front. Central banks around the world are now raising rates into this next hiking cycle. And as we know, the era of free and cheap money is over, which means that, of course, the riskier end of the market has been really suffering the most. Macroeconomic uncertainties are persisting. Recession fears are growing. Investors, analysts, and economists are now wondering whether the Federal Reserve and other central banks can navigate this soft landing and avoid a recession and a significant slowdown, while, of course, curtailing this runaway inflation. And so this leads us to some of the major pieces of news and events across the cryptocurrency market over this past period. There's been a lot, as mentioned, from layoffs to withdrawal halts to uncertainties surrounding coins, and today we'll unpack that all. First and foremost, Coinbase. We know that Coinbase has been one of the leading companies that had a significant IPO that attracted a lot of fanfare last year. However, it's terminated over 1,000 employees, which makes up 18% of its workforce. This was abrupt, and it sent a lot of shivers throughout the markets and a lot of fear through the cryptocurrency market as well. Coinbase CEO Brian Armstrong announced in a blog post that they terminated over 1,000 employees due to a crypto winter. As we know, there's been significant falls. Cryptocurrency markets are now worth $1 trillion after topping the $3 trillion of market cap throughout the peak. Hundreds of employees woke up to the uncertain fear. And as we know as well, this has not only been isolated to Coinbase, but there's been a lot of potential cuts across other companies too. Just to get that context of Coinbase, who they are and where they're positioned, they came onto the market in 2021, mid-2021, amidst a huge IPO. Came in over that $200 US mark, but now they're trading for only a quarter of their value. They've been symptomatic of the broader cryptocurrency marketplace, but it's not just Coinbase. And it has really sent a lot of shivers and uncertainty about what this means, particularly over the short to medium term for the crypto space. Crypto exchange, Crypto.com, as well as BlockFi and a couple of other companies have been cutting their workforce too. 5% for Crypto.com. BlockFi said roughly 20% of its workplace will go. The Winklevoss twins, their exchange Gemini, cut about 10% of their workforce. And so this has continued to go throughout the sector. It's worth noting as well that Celsius has been something that's attracted a lot of attention. Celsius is a decentralized finance lender. Essentially, you can think about it as a crypto lender or potentially a crypto bank. They had significantly high yields, and so we're attracting a lot of inflows in. And this is a globally significant company as well. But they froze withdrawals after a myriad of failed DeFi strategies, and it suffered a range of severe losses. And now customers are fearing that they may not be able to access funds. And of course, if they are able to access the funds, the fears of potential bank runs or what would flow out of that. We know that the markets have been reeling post the Luna collapse. As mentioned, if you're interested in that, you can check that out after this video. And now the cryptocurrency market had another sell-off on the back of this Celsius announcement. It's worth noting as well that it's not only isolated to Celsius. Unfortunately, there's another fund as well called Three Arrows Capital, which is having discussions around their insolvency too. And this article here brings up a pretty interesting discussion about if the collapse of Luna was cryptocurrency's Bear Stearns moment, then potentially what could that mean for Celsius if it could become the Lehman Brothers, really tying in that thread back to 2008 and the GFC. There is a lot going on, so drop in a comment below and let us know what you've made of this past week and month on the cryptocurrency markets, and where do you think things head from here. Also, one of the biggest players in the space, Binance, they actually had a halt in terms of withdrawals as well for around about 3 hours. Later, it was revealed that it had to do with hardware concerns and concerns surrounding hardware fails and wallet consolidation. But of course, this sent shivers throughout the market as well. And it really just amplified the big uncertainties and the fear surrounding the cryptocurrency market. Now, Tether is one that's attracted a lot of attention. We know about the stablecoin uncertainty with the Terra Luna debacle. But now there's fears about Tether because of the significant reliance on Tether as well. This, of course, hasn't had many significant revelations over this past period, but there's just been more and more articles and publications starting to discuss Tether's role within the system, within the cryptocurrency market system. And so I'd love to know your thoughts on all of that. When we're having a think about where things are currently positioned, as we can see here on the charts, Bitcoin, using that as a proxy for the cryptocurrency market, is trading around that 20K level. It's worth noting as well that it's just in and around that 200-day MA, which obviously is going to be a key level. We can see that it's been tested there a couple of times over this past period as well. It's also worth noting that it's a solid level of support. It was tested in and around those levels at the peak of the 2018 uplift, back end of 2017, early 2018. And so obviously this 20K level is going to be key. It couldn't hold here on the 30K level. This is on the weekly. When you're looking down at the daily, you can see we've had some consolidation right in and around this 20K level. And now the market's just trying to work out and decipher where it wants to head from here. Ethereum's around that $1,000 mark, so it's been in a very similar position, and there's still a lot of uncertainties and unresolved questions that the market wants to talk about. And so, what are some of these unresolved questions? And most importantly, where do things head? First and foremost, before we unpack these questions, if you're new here, welcome. We've just launched our second channel as well. It's called For Investors. Plenty of daily videos between both of these, so make sure you head over, subscribe, and turn your bell notifications on. But thinking about some of these key questions. As we all know, I think the first and most important discussion point is we know the narrative, but it's worth discussing once again that cryptocurrencies are a risky asset type. It's also worth mentioning that unlike your more conventional asset types, Bitcoin and the other cryptocurrencies have no underlying intrinsic value to underpin it, like earnings and cash flow, which makes it a lot more difficult to evaluate on a comparative basis, but it also means that there's no floor underneath it. And this contributes to the volatility. As we've talked about on the chart, we've got some key levels outlined here. As we know with the cycles, Bitcoin generally leads and then the alts will follow. But for now, the market's waiting to see if and when the markets bottom out and how far we go to the bottom and what the depths of what this crypto winter might look like. As we've all seen over this past period, trust and sentiment, it's at lows for the crypto market. It started, of course, with some of the uncertainties, and now there's questions about market functioning. And as we know, the cryptocurrency markets move in cycles. This is not going to be surprising for those who have been through a couple of cycles for now. But of course, if this is your first cycle and the first time you're seeing this, it can be confronting and it can be difficult to digest. But it's worth looking back at history. As we know, the old quote, history doesn't repeat, but it often rhymes. It's worth getting an understanding about how cycles can move, the magnitude of the types of moves, and what you could anticipate in the upcoming periods moving forward. And we know there's always that discussion surrounding regulation, but ultimately regulation is likely if and when it comes through to bring increased institutional investment. Increased institutional investment adds floors underneath prices. It also has the ability to potentially remove some levels of volatility and add liquidity to the system, but it's going to take time for mainstream acceptance. Because of its early stages, there's going to be uncertainties. We're still watching to continue to see the different utilities surrounding cryptocurrencies, use cases to evolve. Of course, this store of value narrative has been challenged, particularly because of all of the uncertainty and the massive downgrade we've seen, particularly with the increased correlation of Bitcoin and other cryptocurrencies moving in line with the more risk-on asset types. But ultimately, with crypto being such a new market, what we can see is there's going to be a lot of up and downs along the journey. The only sure bet really is it's going to be volatile, but it's definitely going to be one that's fascinating, particularly as we move into a more digitally integrated world. I'd love to know your thoughts. Drop in a comment below. Big thank you for joining us. For now, stay well and happy investing.